Good afternoon, ladies and gentlemen. Welcome to the 26th of May weekly market review. One more week to the June school holidays as we were chatting in the back. And as usual, I have Gerald with me today. How are you, Gerald?
Hi, Sunny. I'm very well. So I think we have come to the end of the Singapore earnings season, but there's still a lot of geopolitical news that is moving the markets, a lot of concerns about the US government debt. So I hope to be able to share some of these updates with the viewers today.
Yes, indeed. We didn't had a very good week last week, I would say. Most of the US indices is down more than 2%, coming off the previous 6 weeks of continuous sort of a growth in the US index with the recovery from the start of the tariffs in April. And over the weekend, we saw Donald Trump sort of announcing again that the tariff war is back on with the EU side with a 50% tariff, which was pushed back to 9 July. So the tariff issue is not totally over yet, and I think Gerald will share with us more insights today.
Sure. Okay, so to start with, the usual disclaimers that today's sharing is for information purpose only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can go to this website, sias.org.sg/membership, or scan the QR code. And as a member, you can access various online resources as well as investor education programs. In fact, Sunny and I were just chatting about the REIT bus tours that will start in June, which will actually bring you to various assets owned by the REITs. So if there's something that you're keen on, do visit the SIAS website to find out more. Okay, so in the past week, we saw some pullback in the market. The S&P 500 was down by 2.6% to 5,803 points. And the STI was also impacted by the weaker sentiment, down by 0.4% to 3,882 points. Part of the reason of the fall in the stocks was due to the increase in US government bond yields. Earlier, we saw a downgrade of the US government credit rating. And then at the same time, we saw an escalation in the trade war when Trump actually threatened the EU with more tariffs. So all of it is impacting investor sentiment again due to the uncertainty, which has led to this fall in the share prices. Okay, so we see here the headlines around the US 30-year government bond yields back up to above the 5% psychological level once again. So the last time it was at this level was in 2023, and that is driving concerns that the US government bond yields are actually going to impact many different things, including business spending as well as US consumer sentiment. Okay, this is what we see likewise for the US 10-year government bond yield, at one point touching about the 4.6% levels. So that is actually a fair bit of increase compared to say 4% in early April. So I get many questions around whether that's translated into Singapore government bond yields. So that is really something that we have seen for the US, but less of Singapore. If I were to look at the Singapore 10-year government bond yield, still at fairly moderate levels, 2.5%. In fact, in the 6-month Singapore T-bill auction last week, we saw the bond yields coming down further to 2.2%. Okay, so I think a lot of the concerns is around US government debt, whether the government deficit is too large, whether the US has got too much debt, and that is driving a lot of the increase in the US government bond yield. So if we are to look at the likelihood of Fed rate cuts, currently still two rate cuts expected for 2025, one potentially in September and one further one in December this year. In the Singapore market, we saw that the fall was not as significant as compared to the US. In terms of the top performers, we still saw some stocks that were able to have gains in the past week. So this was Singapore Airlines, which reported their earnings the previous week, and I shared about in last week's weekly market review, as well as Singtel, which I'll be talking more about today. In terms of the worst performers, we've got some of the REITs here once again, due to the increase in the US government bond yield. So, Frasers Logistics and Commercial Trust down by 6.6%, also partly because it went ex-dividend, as well as Mapletree Pan Asia Commercial Trust down by 3.3%. Okay, so I'll talk a bit more about Singtel, which is a name that's done very well. In fact, we see the name hitting 52-week highs, now close about $3.90 per share. This is the results that were reported last week. We saw the underlying net profit was up by 9%. So this is the basis for the core dividend payout, and we saw that the dividend was increased as well. So while the revenue was stable, we saw an increase in the profit of Singtel, and I'll break down what is driving this increase. Okay, if I were to look at its core business, we see that Optus, which is the Australian subsidiary, saw a fairly sharp increase in terms of its operating profit. This is due to improved performance in the mobile business as well as cost management. Okay, in Singapore, the profit was flat, stable year on year. This was due to the mobile service having revenue being stable compared to the previous year, as we see that there's fairly strong competition within the Singapore mobile space. In terms of the growth businesses of Singtel, we see the NCS business having a fairly sharp increase in terms of its operating profit, as it was able to have higher margins as the increase on the delivery margins as well as cost optimization. In terms of some of its overseas businesses, we saw that the regional associates profit after tax also increased by 4%. This was driven by various businesses, including AIS in Thailand, as well as Airtel in India. Okay, so overall, we see that Singtel was able to deliver on some of its targets in the most recent fiscal year. The EBIT growth rate was at 20%, which is at the high end of its range of target, which is between high teens to low 20%. Okay, they delivered on cost savings. Okay, and the regional associates dividends of 1.3 billion was also in line with the targets. So all in, a strong set of earnings delivered by Singtel, which was actually above if or in line with the previous targets that were announced. And with that, they have also shared their guidance for the upcoming fiscal year. They are continuing to target an EBIT growth of high single digits, as well as continued annual cost savings of 200 million Sing dollars. With the company being able to achieve some of its targets in the last fiscal year, they continue to focus on the capital management. So part of it is continued asset recycling, and the target here has been increased to 9 billion, from 6 billion previously, due to the success that it has seen in terms of some of its asset recycling programs. So with the increase in the asset recycling, they are actually being able to allocate more resources towards growth opportunities, paying down on its debt, as well as returning excess capital to shareholders. So part of this increase in returning capital to shareholders is in the form of higher dividend payout. So we saw a final dividend of 10 cents for Singtel, which will bring its total dividend for FY25 to 17 cents. And that is above the guidance of 16.5 cents. So this 10 cents in dividends include both the core dividends as well as the value realization dividend, which was actually announced by the company as it continues to execute on its capital management program. On top of it, the company has also announced a 2 billion value realization share buyback program. This will be over the course of 3 years till FY28 and will be funded from the excess capital of the company. So what we do see is that with the capital management, they are able to not only increase on the dividend payout, but also put aside capital for the share buyback program. So all in, they have reaffirmed their core dividend, which is between 70 to 90% of the underlying net profit after tax. You've got the value realization dividend, which is 3 to 6 cents per share annually in the medium term as they continue to divest some of the assets, as well as a value realization share buyback, which is allocated 2 billion over a 3-year time period. Okay, so all of it is helping to improve the sentiment towards Singtel and explaining the improvement in its share price performance. Okay, the next stock I wanted to just talk briefly about is SETS. We have seen the share price of SETS coming down from above $4 to about 250 due to concerns about escalation of the trade war, and then now recovering to about $3 as some of these trade war concerns actually ease. In terms of the profit for the fourth quarter, which is the quarter ending March 2025, we saw the net profit increasing 18% year on year to 38.7 million. So that will bring the full year net profit to 243.8 million. And a big part of the improvement is driven by improve in volumes across both the flights handled, the air cargo handled, as well as the aviation meals handled. Okay, so we see for the fourth quarter, there was an improvement in revenue, improvement in the EBITDA margin, as well as an improvement in the free cash flow generation. With that, they have announced a final dividend of 3.5 cents, which will bring the total dividend to 5 cents for the fiscal year. Okay, so this is what we see in terms of the flights handled, cargo tonnage handled, as well as the meal served. Okay, so if I were to look at the meal served first, so for the aviation meal served, the amount actually increased on a quarter to quarter basis. That's due to the continued recovery in the flight volumes. And in terms of the full year, we see that for the group, the meal served increased by 21% year on year. Okay, for the flights handled and the cargo tonnage, we saw an increase in the full year. But if I were to look at the most recent quarter, that actually came down slightly. The flights handled came down slightly. I believe that is due to seasonal reasons, due to the calendar year fourth quarter being typically a stronger quarter. If I were to look at the cargo tonnage handled, that actually came down in the fourth quarter of their fiscal year. And I think that is partly also due to the weaker trade volumes that we have seen over this quarter. So this is something that we'll continue to observe to see whether with the escalation in the trade tensions, we'll continue to see a moderation in terms of the cargo tonnage being handled. The good news for SETS is the cash flow continues to improve. So we see here that the fourth quarter operating cash flow as well as the free cash flow continue to go up. And that is helping the company to reduce its net debt as well as gain confidence towards the dividend payout. Okay, so that is the two key results that I was watching out for last week. For this week, there isn't any major announcement in the Singapore market. I believe many investors will be looking out for the Nvidia earnings because that will continue to drive the sentiment towards the US tech sector. So with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, on the coverage on the latest earnings from Singtel as well as SETS. So let me go through the roundup of what happened in the past week. Let me start with the US indices first. So as Gerald touched on earlier, we came from a very good 4 to 6 week period from the recovery of the tariff escalation. But then last week was a very clear reminder that Donald Trump sort of a tariff tantrum is not totally over yet, but just on pause or on ice. Okay, so over the past 1 week, there are several concerns that develop on the global or the US markets. One is the Moody's downgrades of US credit rating. So that in the history in 2023 has shown that in the short term will cause some softness in the markets. And on top of that, closer to the weekend, we saw Donald Trump threatening to sort of put out a 50% tariff on EU. So that also caused, that's a very good reminder that the tariff war that the US is doing with the global partners is not over yet, and 9th of July will be the date that the tariff that was promised earlier will kick in if there are no deals that are going to be announced for those countries that are impacted. Okay, so for the Dow Jones Index, you can see in the past 4 trading sessions last week, we are down. So we are down more than 2% for the Dow Jones Index. We are also now currently below the red color line, which is the long-term 200 days moving average, and now riding on the support of the short-term moving average, which is the green line 20 days moving average. So I think for now, going forward, there is not much of a catalyst this week. So I would be sort of thinking it will be a rather quiet week, except for the Nvidia earnings. So Dow Jones should be able to hold on to the 50 days moving average, which is the blue line that you see here at 41,039 points. So 41,000 is the handle that we are looking to see Dow Jones sort of a hold on to for this week, with the lower bound of the Bollinger Band at 40,075 points, giving further support over here. Okay. So resistance wise, I think we want to try and sort of hold above the 200 days moving average at 42,346 points. And resistance could come in at the 43,000 handle or the upper bound of the Bollinger Band at 43,088 points. Indicator-wise, it's not looking very pretty, not looking very good. MACD has been showing that in the past 7 trading sessions, at least I could see from here, the MACD histogram has been showing that the uptrend momentum that we see in the past 1 month is subsiding quite a bit. And a crossover of the MACD line below the signal line is likely going to happen soon this week. And that could mean that we could have a change in direction to go downtrend from here, since the uptrend that we saw in April and May. Okay, on the RSI indicator, you can see that we came from a peak of last Tuesday reading at 63 points, which was a healthy reading. But now we came down to the 51 point level, just 1 point above the 50-point neutral mark for the Dow Jones Index. That means that uptrend momentum has significantly weakened in the past 1 week, and hence going into the neutral zone, at least right now. So the indicators are telling us that we may see a slight further pullback from here, and hence if let's say I'm in the opinion that peak Trump tariff tantrum is over, and hence if you are looking at sort of accumulating some of the US indices through the ETF, it might be good to look at least the 50 days moving average at 41,000 handle, or even the lower one at 40,075 points, which is the lower bound of the Bollinger Band. Okay, next let's move to the broader index, S&P 500. So we are resting the S&P 500 at a close of 5,800 points. Last week is resting just above the 200 days moving average at 5,773 points. That is also finding confluence with the 20 days moving average now at 5,752 points. So this will provide some short-term support for the S&P 500. But as we see over here, the indicators have a similar kind of behavior to the Dow Jones Index. So that is telling us that we are expecting further weakness to come in from the S&P 500 index in the next few weeks. So the next support level would be the blue line, which is the 50 days moving average at 5,584 points, with another support coming in at the lower bound of the Bollinger Band at 5,461 points. So we are looking at the 5,500 level to be a critical support for the S&P 500 should the sort of the pullback deepens, and we have to push on downwards and look for some support level coming in. Around this level, we also saw a mini double bottom formation over here. So that could signal that there could be some buyers coming in as well around the 5,500 level. Indicator-wise, MACD definitely is likely to go negative this week, and hence, if that is a confirmation, then likely the downtrend will go towards 5,500 points, so a 300 points drop is expected on the S&P 500, with the RSI also coming down towards the neutral zone of the 50-point reading. And we need to take note here for the RSI for all the US indices, if we cross below the 50-point neutral mark and we go below sub 50, then definitely you will want to go down to the lower support levels to look for some rebound coming in, which in the S&P 500 will be the lower bound of the Bollinger Band at 5461 level. Next, let's move to the tech-heavy Nasdaq Composite, which was one of the best performer among the 3 US indices in the recovery from the peak tariff tantrum that we see in April. So Nasdaq has actually recovered quite a bit, and let me update this recovery to the latest level that we have. So you can see that we have jumped about 30% from the low that we saw on 7th of April. Okay. So this is a good recovery, but we are still quite a fair bit away from the all-time high that we are seeing. The retracement in the past 1 week has sort of put the Nasdaq Composite Index down towards its moving averages. You can see that we are finding confluence among the 100 days, 200 days, and the 20 days moving average for the Nasdaq Composite Index. So that would be the first support level for the Nasdaq Composite Index at around the 18,412 points level. That is the 200 days moving average reading. And then you have the 50 days moving average at 17,564. So that could be the next support level. And in the next 1 or 2 trading weeks, the lower bound of the Bollinger Band now at 17,000 may also catch up, okay, or sort of converge towards the 17,500 level, which is the 50 days moving average, to give it further support for the Nasdaq Composite Index. But definitely in unison with the other 2 US indices, indicator-wise, the MACD indicator is showing that we are going into a negative reading. And once that happens, that is the confirmation that we are going to see a technical pullback. So the 17,500 level will be a key support level that you will want to watch out for. And then the RSI now trending below the sub 60-point level, now at 59, going towards the 50-point level, shows a weakening of the uptrend that we noted in the past 6 or 7 weeks or so. So in the next 1 or 2 weeks, we expect the indices to sort of have a bit of a technical pullback towards the second or even the third support level, which is the 50 days moving average or the lower bound of the Bollinger Band. Lastly, let's move back to the Singapore market. Singapore market, as you can see, we have also rebounded about 17%, I would say, from the low towards last Tuesday, or the 13th of May Tuesday high, at about close to the 4,000 level. So we rebounded about 17%. So in the past 1 week, STI is almost flat, which is what Gerald shared earlier. So less than a 0.5% movement on the STI index for the past 1 week. You can see that we are sort of looking for a direction for the STI index here with the convergence of the Bollinger Band. So the index is the moving average are not really telling us a lot of information over here on the STI index, except for the blue line that the red line that we are always looking out for, which is the 200 days moving average, now at 3,715 points, which is about 150 points from the current level that we are seeing. The MACD indicator has already gone negative today on the Monday morning, and it looks like it's plateauing towards a horizontal direction, indicating that not much momentum and not much direction could be seen on the STI index according to the MACD indicator. The RSI has also been largely flat, sort of intertwining with the 14 days RSI moving average, which is 2 weeks reading. So now at 56 compared to the 14 days RSI reading of 58. So that is also telling us that, hey, there is not much of an overbought or oversold kind of situation in the STI index right now. So everything is still waiting for some of the maybe clearer or more developments from the tariff negotiation before we see where the index will go. So on the STI, likely to be range bound in the next 1 or 2 weeks, with the indicator showing no indication of any overbought or oversold level right now. Okay, so these are the updates that I have this week. Anything else to add, Gerald?
So Sunny, I'm sure you'll be looking out for the NVIDIA earnings this week.
Yes, of course, NVIDIA earnings, everyone will have eyes on that, and that will sort of give us a later reading on where is the AI development and where is their hunger for the AI growth. Is it still growing or not?
Yes, so hope to be able to share some of these updates in the next weekly market review, together with other macro developments, since we still see a lot of news flow around the tariff situation.
Yes, so if you would like to know what is our comments on the NVIDIA earnings, do stay tuned next week for the next weekly market review, and we'll update you with the latest earnings from NVIDIA, as well as some of the macro developments in the markets that's happening. Okay, so that's all the time that we have for today. Thank you for tuning in, and we'll see you again next week, next Monday, on the next weekly market review. Goodbye.
Thank you.